Ladies and gentlemen, good day and welcome to the Tube Investments Q4 FY2022 conference call, IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anupam Gupta from IIFL Securities. Over to you, sir.
Thanks, Diksha, and welcome everyone to the fourth quarter conference call for Tube Investments of India. From the management, we have Mr. William Subbiah, Executive Vice Chairman, Mr. Arun Murugappan, Chairman, Mr. Mukesh Ahuja, who's taken over as the Managing Director recently, Mr. Mahen Kumar, EVP and CFO for the company, and Mr. K.R. Srinivasan, who heads the metal form business, as well as Mr. K.K. Paul, who heads the mobility business. To start off the call, I'll hand over to Mr. Subbiah for the opening comments, and then we can open up for the Q&A. Over to you, sir.
Thanks, Anupam. The board met yesterday and approved financial results for the quarter and for the year ended 31st March. The board also declared an interim dividend of 2 per share in February, and now we've recommended a final dividend of 150 per share. Okay. The revenue for Q4 was at 1,735 crores compared to 1,480 for the same period in previous year. And revenue for the full year was at 6,359 crores compared to 4,256 for previous year. The PBT after exception was 173 crores as against 162 crores for the same period in the previous year. PBT for the year was 628 crores compared to 359 crores for the same period in the previous year. ROIC 46.5% for this year compared to 35.1%. Cumulative FCF was 205 crores, which is at 43% of that, and that was lower than the same period of the previous year. This is predominantly because the peak cash flow in the previous year was higher due to lower NWC levels, right, in terms of how we started the year. In terms of overall business, the Indian auto industry is continuing to face challenges. CII's revenue for the quarter, like we said, was 1,735 crores, and then I'll get into the individual segments. Engineering revenue was at 1,030 crores compared to 854, and PBIT was at 103 as against 92 in the same quarter, which is a growth of 12%. And full year revenue was at 3,868 versus 2,337, and the full year profit was at 376 versus 251, which is a growth of 50%. Metal form, the revenue was at 336 compared to 335, and PBIT was at 39 as against 37, which is a growth of 5%. And full year revenue was at 1,240 as against 1,032, and that was basically a profit of 136, PBIT of 136 crores, which is a growth of 81%. And mobility for the quarter was 249 versus 301 last year. The bicycle business has been down, and PBIT was at 13 crores compared to 17 in the previous corresponding quarter. The revenue for the full year was at 963 compared to 847. PBIT for the full year was 55 as against 44. Revenue for the quarter was at 194 compared to 92. The segment also includes trading revenue for the sale of TMT bars, and PBIT for the quarter was at 4, which is the same as previous year. And revenue for the full year was at 562 and versus 263. And profit for the full year was at 36 versus 13. In terms of key developments, the company has subscribed to 17.52 crore share warrants for CG Power and Industrial for 150 crores and has paid 37.5 crores, being 25% of the total warrant subscription amount. During the quarter, the company exercised 9 crore share warrants of CG Power out of the total warrants of 17.5 and paid 57.78, representing the balance 75% of consideration for the warrants exercise. Right now, the company holds 58% on a fully diluted basis of CG Power, and also the corporate guarantee of rupees 1,365 crores in favor of the lenders of CG Power has been released. During the quarter, the company has incorporated a wholly owned subsidiary, CI Clean Mobility. The CI has incorporated a wholly owned subsidiary, CI Clean Mobility Limited, to pursue and engage in clean mobility and electric three-wheeler manufacturing. As part of the clean mobility business, CMPL also acquired a 70% stake in Celestial E-Mobility on 4th March. It's in the business of making electric tractors. CG Power and Industrial, a subsidiary in which the company holds 58% stake, registered consolidated revenue of 1,507 crores during the quarter, as against 1,118 crores in the corresponding quarter of the previous year. PBT for the quarter was 139 crores. As against 19 in the corresponding quarter of the previous year. Consolidated revenue for the full year was 5,561 crores, compared with 2,964 crores for the previous year. The consolidated PBT is 528 crores as against a loss of 117 crores in the previous year. Shanti Gears registered a revenue of 104 crores for the quarter as against 72. PBT for the fourth quarter was at 19 as against 12. And the revenue for the full year was at 337 as against 216. And PBT for the year was at 59 as against 26 crores. So the consolidated basis, we have 3,415 crores in revenue and a PBT of 295 crores for the quarter. And for the full year, it was 12,525 crores in revenue, and the PBT was 1,135 crores. Commenting on the financial results, Mr. M.A.M. Arunachalam, the chairman, basically said the results of the quarter show a steady performance by the company, even in the wake of challenges on account of supply constraints, lower domestic demand, increase in fuel and commodity prices. Part of it also was the result of the war in Ukraine. Exports have, however, consistently delivered good growth in fuels and the industrial chain businesses. The company is taking various measures to mitigate the impact of the above challenges in the business. Our new initiatives in clean mobility will bring diversification to the existing portfolio of our business with fuel growth. So, Anupam, with that, I will stop and we'll be happy to turn it over for questions.
Sure. Disha, you can open up for the Q&A.
Thank you so much. We will now begin the question and answer session. Anyone who wishes to ask a question will press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you will press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may press star and 1. We take the first question from the line of Vimal Gohil from Union AMC. Please go ahead.
Yeah, so thank you so much for the opportunity. Sir, my first question is regarding your margin performance. I'm not sure if you've sort of addressed this in your opening remarks. I joined a bit late. In the other segment, our EBIT margins have fallen quite sharply. As compared to other segments, I mean, sequentially, for example, engineering margins have grown, but 6.6% EBIT in others has fallen to 2. Just wanted to get a sense on what has transpired there and what is the outlook. And secondly, just if we can give any update on some of the businesses that we are incubating, how are they scaling up? We've been talking about these newer businesses for about a year now. So any update over there would help. Thank you.
Yeah. So the other segment, like we said, the big change is how we report the TMT bars revenue, right? That's what's causing the EBIT to drop, because the TMT bars now is getting reported as a revenue item instead of just a commission item. Okay. So that's the cause for movement in that.
So there is no drop in profits. It is just the denominator went up because trading revenue got reported there.
So, sir, are these margins? Will these margins? What would be the sustainable margins then in our in this business now going forward? Are we planning to increase our manufacturing portion there? How should we look at this?
So the TMT bar will continue to be trading only. We won't be manufacturing them in-house. That's what you're asking.
So what should be the steady state margins there, sir?
It's difficult to guess here. See, this segment comprises of industrial chains also, which is one of the most profitable businesses for us. So there the margins will continue to be in the same range. Depending upon how the TMT revenue comes up in future, in terms of trading volume, the overall margins may keep fluctuating.
Got it, sir. Sir, and anything on the new businesses?
Yeah, I think, like we said on the new businesses, these businesses are not a material part of kind of our overall revenue yet. And these new businesses will take time to ramp. So when they do start ramping, we will basically kind of start sharing more details. Sure,
sir. Sir, and just on the overall outlook on the engineering piece, exports have done exceedingly well for us during this year. If you can just, it's a two-part question. I mean, what is the overall outlook here? I mean, in terms of the industry that we are serving, what are we hearing from our end users over there? And secondly, out of the the growth that we have reported this year, how much of that would have come from maybe a pure volume growth, and how much of the growth would have come from the pricing increases that we have taken to offset the commodity cost pressure? If you can break that up for me, please.
Yeah, Mukesh this side. As you are aware, we have started for the export journey almost 4 or 5 years of good work, and now OEM approval has always been taking place. And we foresee even exports outlook is going to be strong only. But however, we see in the current quarter and next quarter, because of the build-up in the inventory on the sea, there can be little bit drop, but overall outlook looks to be strong only. And to answer your question, 60% of the growth is coming because of the volume growth, and maybe 30-35% growth is coming because of the selling price increase because of the raw material issues.
Perfect. Thank you so much, sir, and all the very best for FY23.
Thank you.
Thank you. We take the next question from the line of Abhishek Ghosh from DSP Mutual Fund. Please go ahead.
Yeah, hi sir. Thank you so much for the opportunity. Sir, if you can just broadly start with, effective 1st April 2022, the changes that we are seeing in terms of Mr. Mukesh has been elevated as MD, and sir, you have moved in as Executive Vice Chairman. So is there a change in role or its status quo? If you can just broadly start with that.
Sure. So the basic intent now is that Mukesh will his primary focus, so both of us will kind of we'll talk about kind of where there'll be an intersection, but Mukesh's primary focus will be on all of the existing and what I would call kind of the the erstwhile businesses of the company, so kind of the engineering business, the mobility business, our industrial chain business, and our metal form businesses. So Mukesh will take primary charge for those businesses and the growth around that. And then I will start playing a broader role in terms of the newer businesses, which include clean mobility. Also, we saw that we've taken out Concall, who used to look after the mobility business, to become the head of the clean mobility business. So I will be spending more time on growth and new initiatives, and Mukesh will be spending more time on existing businesses. Not to say that we're going to separate that like 100%, but that is the broad thinking, because both require significant focus, and we felt like it required separate people to be focused on each of the areas. Does that provide clarity?
Yeah, that's thank you so much for that, sir. And sir, just if you can just broadly talk about the timelines of the EV launches, both in the three-wheeler and tractor. How should one look at it? Some timelines and what are the experiences as of now in terms of the product acceptance and any market feedback? That will be helpful.
Sure. I mean, the three-wheeler is the one that we can kind of make most statements about, because we're most far along that path. On the three-wheeler right now, we're planning for a launch hopefully by about September. We are kind of quite far along the homologation process there with the vehicle, and the plant is now pretty much ready. So, I think we've had very good reception from the initial set of dealers and potential customers we've spoken to. We're quite excited about that. And like we said, we plan to launch a product by September. On tractor, I think it could take, up to the we first got to go through the homologation process, and I think we'll be able to give you a more deterministic time as to when we will launch that after we finish homologation. So we're trying to get into homologation, submit for homologation by the end of July.
Okay. And sir, just in terms of the overall, the tubular business and the other parts of the business, mostly for engineering, I think it will be relevant, is the kind of price hikes that you have taken for the entire year. And is there some price hikes which is not still, kind of honored by OEM, which you're kind of pushing for given the steel price increase? Some color there will be helpful.
Like you're aware, we are having a good arrangement with all the OEMs for backup for the steel price increase, whatever will happen. It's a question of little bit lag, sometimes 3 months or 6 months. We are able to recover that fully. But however, the challenge is whatever the inflationary costs are arising on account of fuel and the yield, there we are going through some negotiations with even the OEMs, as well as we are planning cost reduction inside the company to mitigate even that impact. I hope that answers your question.
So what will be the cumulative hike that you would have taken for the year that you would have got?
If we see last 2 years, I think the raw material prices have gone up by almost 100%.
So you would have got a corresponding 30-40% kind of a hike? Is that a fair thing to assume?
More than that.
Okay. So basically, the entire growth is coming because of price. On a volume front, you will still be lower.
No, exports have mitigated that. Whatever domestic market degrowth is there, that we have mitigated by doing more exports. So overall, there is a growth in the volumes also for the company.
Okay, great. So just one other thing is, if I look at the other expenses as a percentage of revenue in the current quarter seems to have moved up a lot. Is there a freight element, or is it because of the TMT bar the way you are recognizing the revenue? What is the exact reason for that?
Which period are you comparing with, year to year or what?
Sequentially, sir. Sequentially.
Means Q3 to Q4.
Yeah.
I mean, this is just scale of operation. There is nothing extraordinary, anything special there.
Okay.
Normal increase.
Okay. I have a few more questions. Probably I'll come back in the queue, and best of luck to the entire team. Thank you so much.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and one at this time. We take the next question from the line of Maitri Parekh from PI Square Investments. Please go ahead.
Yeah, so my question regarding EV has been answered. Now I have one more question. But what will be the exports of the total revenue?
What is the what? Sorry, can't hear you.
Exports. Yeah, exports.
For the company as a whole, it's around 12%.
Yeah, company as a whole.
Q4 it was around 12%.
Okay, and FY22 would be around?
Maybe a little bit higher, maybe around 14, 15.
Okay. And one more question, that we have subsidiaries in Sri Lanka as well, right? So because of this economic crisis in Sri Lanka, what is the condition and where do we stand in as a part of those subsidiaries?
There is no immediate impact because the subsidiaries in Sri Lanka are meant only to cater to our supply chain requirements.
Okay.
So imports and exports are denominated in US dollars, so there is no impact. So very little which is getting added to the value added because of the local operations.
Okay, and one last question, that what would be our market share in the bicycle segment?
I think it was around 27%.
27. Okay. That's it from my side. Thank you.
Thank you so much. We have the next question from the line of Nishit Jalan from Axis. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. So my question is on your share of auto business. Over the last 2 years, auto industry has been in downturn, while you have done very well in exports and probably non-autos as well. So just wanted to ask, what would be the share of domestic auto business in your overall revenues now? And if you can give some broad color within the engineering and metals form segment, it will be very helpful.
Broadly at the company level, it's still the range of 55-45, 55% auto. It will be higher in metal form products, maybe around 70-30 there. And then engineering also, I think it will be in the range of 55-45 or 60-70.
So basically you are saying 55% of total revenues is domestic revenues. Did I hear that correct, sir?
At the total company level.
55%, right? And within the segment is closer to, in engineering and metals form is closer to 65-70%.
Correct.
So that means cycles you are excluding, you are not counting it as a part of autos, right?
Yeah, cycle is not part of autos. We have the other industrial businesses, all those things which are not part of autos.
Okay. Sir, just if I can get slightly more color, within the metal form business, especially the automotive chains, I understand that in both tube and chain business, we are a predominant player. So are we well spread out across all two-wheeler PV OEMs, or there is some gaps? We are not present across certain OEMs, and that could be an opportunity for us in the next few years, both on the auto two-wheeler chain, door frames, as well as on the tube business.
Sorry, can you please repeat it? You're saying the future opportunity.
So basically what I'm saying is you have three different subsegments within autos, right? One is the automotive chain in two-wheelers, second is the door frame for cars, and third is the overall tube business where you cater to all the segments. What I wanted to understand was, are you well spread out across OEMs within segments, or do you think that we will have an opportunity to penetrate into newer OEMs where we are not present currently, and we are gaining traction there, and there could be some good opportunities? If you can give some color without naming the customers also, that would be very helpful.
Just to give you an idea, whichever businesses we are in, whether it is in chains or whether it is in door frame, we are having a good spread over across all the OEMs. Even in the engineering business, our spread is towards two-wheeler, passenger vehicle, commercial vehicle, even the three-wheelers. We are widely spread. That gives an advantage to us as a company in terms of if one segment is not doing well, another segment is doing, like the case in this quarter. Commercial vehicle segment is doing pretty well, but two-wheeler there is a little bit slowdown. That helps to perform us as a portfolio. Okay.
And so my last question is, in all the TI2 activities, that we are present currently, what is the cumulative investment that we have already done over the last 2 years?
FY2, not much actually, maybe around 50 crores. 50.
So you include TI's PMPL, no?
Yeah, that's investment.
So including the total investment, including the EV, the optic lens, the truck bodybuilding, all the businesses combined, what would be the total investments that we would have done so far?
It will be around 210, 220.
160 of that is in electric vehicles, and 50 is in everything else.
Okay, sir. Thank you so much.
Just one more correction on your earlier question. You were talking about the auto industry intensity in MSP, right? MSP products. That will be close to 90%.
Sorry, sir. Sorry, sir, I missed your comment. Can you please repeat it?
No, to your earlier question on auto industry intensity of metal form product segment, it will be 93% if you are taking only the MSPD segment alone.
Okay. And would you be able to give some color on what would be aftermarkets within that? And I would assume that railways as a business has come down, and because of which the proportion of auto business has gone up in the metal form business, right? Is that correct?
No, we don't give that sub-segment information.
Okay. No worries, sir. Thank you so much.
Thank you. We take the next question from the line of Anupam Gupta from IIFL Securities. Please go ahead, sir.
Yeah, so I have a few questions on each segment. So in the opening remarks, you mentioned that cycles has been slow, and which is obviously reflecting in the segment numbers. But how should we look at it from, let's say, next couple of years perspective? Do you think domestic will improve or will remain subdued, and how much can exports offset that as they pick up?
Paul, you will take that question.
Paul, are you there? Will you take that question?
I think, overall the game plan is to see, how we can keep gaining share. Even this year, if you've seen, Mahindra mentioned that we've 27% market share. So we've gained about 2% market share this year in a market that has been dropping. Okay. So in relation to the market, we have definitely performed better. Although the volumes have been lower because of the absolute drop in the industry volumes. We've dropped much lesser than that. But having said that, I think the way that we are wanting to progress there is to see, the newer opportunities of growth, particularly in exports, then in e-com, in fitness, and also in e-bikes. So these present big opportunities for us, and this will offset partly the drop in the trade domestic market and would help us to secure the plans that we've been making. So a lot of action has already been initiated over the last 6 months to see how we can, scale up exports. And a lot of that is in the stage of negotiation, sample submissions, customers visiting us, because a number of customers could not visit us due to all this COVID, which is now slowly being relaxed, international travel, etc. And we hope to, report much better numbers in the export scenario and particularly also the e-bike scenario in the coming quarters.
Okay. So just to get one detail, what will be the share of exports in cycles in this year broadly?
Share of exports now will be about close to 5%, but moving forward, this figure will move up quite dramatically. If we can actuate the plans that we have made and some of the customer connects that we are now establishing, which are in different stages of maturity.
Sure, that helps. Second question is related to the metal form product business. So obviously railways has been muted for the last couple of years. How do you see it improving? Let's say we have announcement for Vande Bharat trains, quite a few. So how do you see that business picking up? How soon can we see that trend in our numbers?
KRS, you will take that question.
as we speak, the Railways is preparing a lot for on this One Way Bharat project. We see good traction. By Q2, Q3, we hope the business will see.
Okay, understand.
Yeah.
And sure. And sir, one last question on the engineering product business. So in engineering products, last quarter you had said that you will basically be looking to increase the capacity for large dia tubes. So has anything been finalized there, or what sort of capacity addition should we expect there? Because it was running at a higher utilization, as I understand.
Yeah, we have taken some steps to increase the capacity at large diameter, which is, as of now, it's a marginal increase. However, we are studying even for the much bigger capex in this segment of the business, and which will take a call in coming 1 or 2 quarters.
Okay. And so just one last question on the share of exports in, let's say, specifically engineering products and industrial chains, what should that be?
In engineering business, it is about 20%.
Okay. And in industrial chain?
Industrial chain will be around 40%.
Sure. That's all from my side, sir. Thank you.
Thank you so much. We take the next question from the line of Shyam Sundar Sriram from Sundaram Mutual Fund. Please go ahead.
Yeah. Hi, sir. Good morning. Thanks for taking the question. My first question is that if we dial back around 3.5 years, you had laid out a set of 7 performance steps, areas of improvement per se. Sourcing, scrap realization being one key item there. If you leave aside the revenue enhancement targets, etc., because the auto industry is now in a slightly more gradual recovery phase. Now, on the sourcing and scrap realization front, from that perspective, if you look at the RM cost as a percentage sales, from F20 to the Q4, the RM cost, the percentage sales has increased by around the 800 bips mark per se. Now, how are those initiatives kicking in, and how do we think about the margin improvements from here? And just added to that, how to think about the PBT margins as we 2 years out per se, we have ended the year at around 10% PBT margin. Can we expect the earlier lean productivity initiatives to continue and yield anywhere between 12 to 14% PBT margins per se?
Yeah, so the short answer is yes. Obviously kind of where we fall in that range will depend on where raw material prices go, because that affects the denominator of where they and I think, Shyam, like you correctly said, lean and productivity will yield more, and sourcing and scrap will yield yes now, because those efforts kind of at least are not going to be the larger drivers at the current point in time.
Okay. Understood, sir.
Huge opportunity still. So lean is, I would say, we're not even quarter of the way there.
Okay, so which business segments do we see these lean initiatives yielding more results, sir?
Shyam, lean initiative we have started doing across TII, and a Japanese consultant is helping us in this direction. So all the businesses are going to go through this and see.
Okay. No, I was just trying to understand how amenable each segment, which of those are more amenable to those initiatives per se. We have seen some improvement on the metal forming side for sure, which you had also talked about in the few quarters back. So are there further low-hanging fruits from these initiatives that can pan out in the next 2 years? That is what I was trying to get at.
Shyam, like Valen said, we are just a quarter in the journey for the full journey to in productivity improvement. So it's a work in progress. Surely there is a good amount of scope to increase the productivity across the company.
Okay.
Finding food, if there's fruits, then we have to go get them.
Understood. Got it, sir. Sir, and the other point on the capital allocation and inorganic opportunities per se, how do we incrementally think about it going forward, sir? Is just from a thought process per se, how do we think about on that front per se?
Shyam, we have we said there's a maximum negative cash on the balance sheet that will end up with negative, right? So we have to borrow. The maximum we would borrow is up to 2 years of free cash flow. Obviously, we're not close to that yet. But we've also said in terms of inorganic growth, we will be very opportunistic. So, right now, with kind of the markets, where prices are for assets, we don't see as much opportunity, though we continue to kind of track a whole lot of companies. So it's purely going to be when we feel like, we're getting, a pricing that is not basically kind of, that is attractive for us to get into these opportunities. And in the meanwhile, we'll continue on some of the PI2 activities, right?
Understood, sir. That is helpful. Sir, one last question, if I may. Cycles as a segment, we saw very good pickup just post-COVID per se. Now, it has started coming off per se. Now, as on a 2-year basis, should we expect the segment to continue to be declining for the industry as a whole? There's more trying to understand the dynamics there, and so therefore only our lean initiatives can then improve our profitability. That is that how to think about that segment there?
Yeah. So I would say broadly, we don't expect any significant market pickup. So the two things we will focus on, one is lean and second is how we improve market share.
Okay. Understood, sir. Thank you very much. I'll call back with you. Thank you.
Thank you so much. We take the next question from the line of Niket Shah from Motilal Oswal Mutual Fund. Please go ahead.
Yeah, thanks for the opportunity. I had a few questions. So first, if you can just give us some qualitative comments on how are you seeing demand on the auto side, because we saw a substantial slowdown with two-wheeler in the last quarter. But whatever checks we do see some pickup on the rural side again. So if you can just give us some sense, because auto is the largest part of your business, some sense on the demand side would be very helpful to start with.
To be very frank, any predictions on the auto demand, let's say, is anybody's guess. So what we are doing is we are focusing on what is in our hand internally, like lean initiative. Can we do the focus on the product portfolio and the exports category? This is what we in this. But as of now, it looks like that commercial vehicle will be looking little strong, and two-wheeler there is a slowdown, and PV looks to be strong, and the EV portfolio also is picking up. That's how the broad phenomena we have it. But as I said earlier, let us focus internally. That is better rather than forecasting industry.
Sure, that's helpful. The second question was on the lenses business. When do we see capacity coming up now for the plans that we had earlier highlighted? So should we assume that in a couple of quarters we should see a capacity coming on stream?
KRS, you will take this?
Yes. Yeah, on the lens business, like we were saying earlier, there is a bit of a pause mode now because of the international travel restrictions. That still continues, but we hope that will get resolved in this quarter because the things are opening up. So second and third quarter, we'll see some good plans being made for the expansion in this segment.
So if I understood it correctly, it's likely to come sometime at the end of the third quarter. Should that?
Yeah, that's right. That's right.
Okay, got it.
Yeah.
Sure. And any comments, again, qualitative comments on the railway side of the business? Have you started seeing some pickup on that side as well?
Yeah, railway side, we are seeing a good pickup. Like earlier, I was explaining about Vande Bharat project. There are a lot of plans from railways for on this project. So we see some good demand from end of Q2 and Q3 onwards. Because the plans are being made now, tenders will be open very soon, and the action will start from end of Q2.
Got it. And final question is, the raw material costs has been going up over the last couple of years. So it obviously distorts the numerator, denominator, and hence the percentage margin.
But would it be possible for you to give us some qualitative comments on, say, EBITDA per ton? Has it improved in FY22 over 21? Because that, I think, might be the right way to look at it.
Mahindra?
Sorry, you're talking about EBITDA per ton for MS?
Yeah, because if the realization goes up 100%, then the percentage margins comes down, but maybe the EBITDA per ton would have moved up as well. So just trying to understand, how should one dissect that?
Yeah, basically we don't measure the EBITDA per ton in our industry. We go by the PBT percentage. And as you know, the operating leverages kick in once the volumes ramp up. So that should only show improvement going forward.
No, I think the question is more because of the pricing increase, right?
Yeah.
Yeah, I think I will answer that. As far as the customers are concerned, OE customers are concerned, we are fairly covered as far as the raw material prices are concerned. We are totally protected. Even in some of the railway tenders, the price variation clauses are there. We are protected to a great extent. Wherever we are also having aftermarket also, we do price recovery. So if you talk of the EBITDA per ton, there would be some challenges in terms of maintaining the percentage because of the denominator effect. But other than that, in absolute terms, we are fairly okay in terms of recovery of the raw material cost increase.
Got it. Perfect, sir. I'll join back in with you. Thank you and best of luck.
Thank you so much. We take the next question from the line of Abhishek Ghosh from DSP Mutual Fund. Please go ahead.
Yes, sir, just a couple of things in terms of overall utilization, and if I just broadly talk about the engineering segment and the railway part of it, because these are auto has not done well and railways has also not picked up. So what will be the broad utilization in terms of the key factories that are kind of catering to these segments? Where will you be at that operating utilization levels?
We just do the capacity calculation exercise almost 1 or 2 years advance. But generally, we don't share the capacity utilization, but I can tell you, next 2 years, we are covered in both the divisions, railway as well as engineering, to take care of any market growth which is going to come.
Okay. So where my question was, sir, that there is a significant amount of operating leverage which will also play if there was a cyclical recovery in auto and railway demand was to come back. Is that something also we should keep in mind?
Answer is yes.
Okay, thanks. And sir, also in terms of the export part of it, you spoke about a lot of the newer countries also kind of giving you approvals. So how should we look at the export journey for tube? Is it a function of more geographies getting approved and you scaling up, or is it also will be a function of more products getting approved in many more geographies? If you can just broadly just talk about it. Is it like maybe you have catered to 60% of the geographies, but maybe in terms of product it's only 20% because of the China plus one factor? How should one look at it? Just some broad comments there will be helpful.
So like we shared in the past, it's a function of both. Our penetration is easily increasing in terms of geography as well as the product. We have already identified close to 11 to 12 product categories where we are going geography by geography and increasing our participation. And our focus remains more on the OEM side of the business, where the continuity of business is assured for at least 5 to 7 years time.
Okay. And today it will be fair to assume that out of the 10 to 11 products, 2 or 3 key products will be prominent part of that export business today?
Yes, 2 or 3 products we can say that. Even at an international level, we are getting into a good share of business. But other 8-9 product categories, we are at a very early stage. So a lot of work has to be done in terms of geography penetration as well as the customer approval. As you are aware of, any OEM approval takes about 2 to 3 years time. So some has already given a result in the last financial year, and the same work continues going forward also.
And in terms of geography also, is it largely US and a couple of more countries giving you this entire revenues? I'm just trying to understand from that perspective.
Yes, it is US, Europe, and even we started participating in China. Last year, even the China also we have done a good exports. And we are looking for new geographies like South Africa, Brazil, and we are penetrating those countries where our penetration level as of now is there.
Okay. So ex-China, the incremental OEMs who are giving you business, is it like earlier they were procuring from China and now they are looking to diversify, that's the reason they are opening up, or is it like you are now up the scale and you're able to better provide them at a better cost? How should one look at it?
Is it like that we do this work by studying even what is the imports happening to that particular geography? And we found that in even China, there are certain products which were getting imported. And we started participating those import substitution program, and that has helped them last year.
Got that. And sir, just one last thing in terms of the engineering part of the business, since you have a very high market share in two-wheeler, tubular products, have you started supplying to some of these tubular products to the EV manufacturers or EV OEMs, or does your product get somewhere consumed in the overall EV vehicle is what my question is, because the penetration in two-wheeler has been fairly high.
Yes, that's the opportunity available for us, and we are participating. We don't know which will be the winner and which will be the losers, but as of now we are taking a strategy. We are participating everywhere. So let's see how the development in the EV vehicle space takes place, and we are participating all segments in EV.
Okay, so your product is getting approved by the new market share guys or new players who are coming into the EV segment in two-wheeler.
Yes, wherever it is a safety critical and quality requirements are there, we are running the race very, very cautiously.
Okay. And so just one last thing in terms of the overall cash flow part of it, and I think the earlier individual also kind of spoke about it. So broadly, if you look at it, this year working capital was a little stretched. You had some amount of working capital cash outflow, and you also had investments into CG Power and other things going. But extra of that, if you look at it, you can broadly generate 600-700 crores of pre-capex cash flow every year at this current run rate. It can obviously improve, but that's the broad number at this point in time, assuming working capital is stable. So how should one look at it in terms of how much of that will go into new EV initiatives? Is there a number there, or will it come as opportunities come by, or with the tractor and the EV investments, is it largely done? How should one look at it?
No, so I think like we said, right, first off, we're constrained at one end because we won't take more debt than 2 years of free cash, right?
Sure.
Second is, it will depend on kind of how quickly this EV trend picks up, right? But broadly, we will look at overall capital allocation across new businesses to manage against that constraint, right, which is not kind of going more than 2 years of free cash. So I really think that at this stage it's a bit indeterminate because we don't know how quickly some of these segments are going to pick up.
Okay.
So the amount of cash required, we've taken a kind of a the total burn to get like the three-wheeler product to market. Each of the segments, right, we don't have more than a total burn of 200 crores to get the product to market, right?
Yeah.
Now the question is kind of once the product is in market, we need to see at kind of what rate the product starts picking up. And that's what is a bit indeterminate at this stage, and that's what we have to we'll get back once we have a better sense of it.
Sure. So because I'm coming.
Let me clarify that there was no working capital challenge or anything last year. Actually, we started last year with a negative working capital because in 2021, because of COVID, the business started ramping up only towards the end of the year, and we had extended credit period and all, which gave us that benefit.
Yeah.
So which got normalized in 21-22.
No, absolutely, sir. My only limited point is from here on, you will generate that 600-700 crores of free cash every year pre-capex. So that should get normalized. I do take your point that FY21 was an aberration. But just to answer just one point, the whole, you also had a thought that you also want to diversify away from auto, right? Your dependence on auto is, you don't want it to be very heavy. So is there, because of the EV adoption curve, is there a change there, or one should largely stick to that thought process?
I think our articulation has always been this, right? If you remember from the first conversation, what we actually said is that our concern was that as an auto supplier, right, we were in a tough spot, right?
Correct.
And if you remember even kind of the earlier conversations in 2018 and 19, our articulation has always been kind of the challenge of being an auto supplier is that we're caught with kind of big guys at either end of us, right? Which is basically we're selling to auto OEMs who are like 10 times our size, and we're buying steel from, again, steel manufacturers who are 10 times our size, right?
Sure.
So industry position-wise, that was a very bad position to be in, right? Now, the way we look at auto OEM is slightly different, right? Because then you're in actually kind of more of a B2C business, right? I think that's a better position to be in. The second is the discontinuity offered by electric, I think, is a large opportunity, right? Which is basically, in our mind at least, is going to create a new set of OEMs that have, as much clout as the existing OEMs have today. I don't know if that answers your question.
Yeah. No, I get that. So basically, you want to have some amount of pricing power which you didn't have it earlier, maybe because of the large scale of supplier and customer you're dealing with.
It's basically a conversion business, right?
Yeah. So whether it be in auto or non-auto doesn't matter, but you at least want to have some pricing power. That's the broad.
Yeah, that's a good way.
Okay. And so just one last thing, you're trying to do too many things in terms of trying to get your grow this company at a very fast rate. What is one or two broader things that kind of worry you today, if you were to just look back at?
Yeah, right now I think a lot of things that we need to kind of see. Basically, the issues are this, right? Which is the biggest thing I think is, and again, it's not just for me, but everybody is just worried about is raw material prices and basically inflation and the price of everything, right? And what that's going to do to overall demand, right? Otherwise, I would say that we're fairly, after coming out of COVID, we were very well poised for a lot of growth. But these two, I would say, are the biggest concerns.
Okay, sir. Thank you so much and wish you all the best. Thank you so much.
Thank you.
Thank you. We take the next question from the line of Aman Rakesh Shah from Chitra Investments. Please go ahead.
Hello. Thank you for the opportunity, sir. Sir, my question is on Shanti Gas. I joined the call late, so if it's repetitive, I will just read the transcript. Some of the questions are, sir, we saw very good order inflow uptake in Shanti Gas over last 3-4 quarters consistently. And last quarter, we saw a very strong order inflow. So, was there any one-off in this order of last quarter? And how are the order pipeline looking like for the outlook for FY23?
The order pipeline is looking okay, but generally we prefer to restrict this call only to TA-related questions.
Okay. The only thing was, can we have, sir, on Shanti Gas, maybe a request would be, if we can have a Concall or some analyst meet, say half yearly, that.
Okay, we'll consider that, and I think you can also write to kind of investor relations there, and we'll be happy to answer questions to you.
Sure. Okay.
Thank you so much. We take the next question from the line of Jinesh Gandhi from Motilal Oswal Financial Services Limited. Over to you, sir.
Hi. My question pertains to first clarification on the lens business. So are we indicating that capacities will come by 3Q FY23 or our plans to put up new capacity will be finalized by 3Q FY23?
So we will start filling existing capacity by then. We've not expanded that business, which we'll only do once we feel comfortable with kind of the existing business.
Okay. So the current capacity which is there of close to 5 to 6 million lenses will get fulfilled by 3Q. Got it. Second question pertains to the Vande Bharat opportunity. So can you indicate what would be our share of pie of that opportunity of the 50,000 coaches? I mean, what could be our content per coach? How should one go about that?
KRF, you will take that?
Yeah. See, from TI, we are participating in the fabrication portion of that Vande Bharat project. We fabricate, side wall, end wall, roofs and all that. Separate designs are being made by railways for it. And we have already developed the prototypes. We've already got the proto order and we have started supplying to them. So we'll continuously participate in the tenders, ensuing tenders for these parts.
Okay. So any sense on what would be our content per coach there? I mean, what kind of revenue per coach we can expect there?
Pardon me, I'm not getting your question.
So per coach, what would be our revenues as such? And say 15,000, 20,000, I don't know.
Normally, we don't share those details, Mahendra. But yeah. We actually participate in the fabrication portion of the coaches.
Okay.
Yeah.
Got it. I'll take that separately. Okay, cool. Thank you.
Yeah.
Thank you. We take the next question from the line of Nishit Jalan from Axis Capital. Please go ahead.
Yes, sir. Just two more questions. Firstly, on the export side, just wanted to understand on the engineering side, are we catering to two-wheeler OEMs in ASEAN region as well? Where I'm coming from is on the metal form business, your exports are very low, and in metal form business, we cater to two-wheeler, the chain business in a major way. So just wanted to understand whether there could be an opportunity if you have already existing relationship with two-wheeler OEMs globally to push more automotive chain products on the export side as well. So that is the first question. And second question is basically what Mr. Vellayan mentioned, that you want more pricing power in the businesses. So obviously, B2C businesses are something which will give you more pricing power. So just wanted to understand what would be our share of overall revenues from the B2C businesses currently, and how should we look at it going ahead from the current TI1 core business, not about the new businesses.
Coming to your first question regarding engineering business for participating two-wheeler segment, yes, we are participating in particularly Asia, Southeast Asia countries. Whatever we do supply to Indian OEMs, that also we take care of the Asian countries. And coming to how to build a synergy between these two, your point is good. But as of now, we give the service to tier 1 suppliers where the synergy is less. But we take your point how we can explore it going forward. That's about first question.
Got it.
Regarding this question of what is the share in consumer-driven business, as of now it is cycles basically where we have a power for pricing, but all other businesses are B2B only. Going forward, like Vellayan mentioned, we are getting into EV in a big space, and which will increase our percentage of share of business for the consumer directly going forward. And when we reach a respectable level, we'll start sharing those numbers.
So I would assume that in the metals form business also, aftermarket would be a good chunk of the overall revenues, which is again B2C. Am I wrong in that?
Yes, you are right. That is also spare part business is also B2C.
Sir, can you share just a rough number, not an exact number, what percentage of the segment revenues would be aftermarket?
We don't monitor as of now internally, as well as don't share also those numbers.
Okay, so one last question from my side. So in the current TI1 core business that we have, any more product adjacencies that you see where you can penetrate or where you can launch more products? What I'm trying to gather is, obviously your business will recover with recovery in auto industry, and exports is something where you will do well. I'm just trying to understand in the domestic market, how can you grow at a faster pace compared to the auto industry? So in that perspective, any scope you see of launching more adjacent products, or any place you see where your content per vehicle can go up? Any color on that would be useful.
We are doing that work because, like in the opening statement, we said that industry is not growing, but our ambitions to grow in the business are higher. So we are exploring those opportunities. Once we form up, we will definitely share with you what are the new businesses we can enter it, which will be adjacencies to the current business.
Okay, sir. Thank you so much.
Thank you. We take the next question from the line of Kashyap from Broadview Research. Please go ahead.
Yeah, hi. Sorry, I kind of dropped out in between due to a bad connection. I missed your answer on working capital at the standalone level. So, I mean, just broad question was that, you have an EBITDA growth of close to 40% year-on-year, but if you look at the operating cash flow, that's gone down from 600 plus crores last year, more than 100% conversion, to 325 thereabouts, which is close to 40-45%. So just wanted to understand in your assessment of the business, where do you see a normalized cash flow from operations at? Is this a one-off? Do you think that this will get resolved over the coming year?
Yeah, that's right. What I was explaining was, there was no working capital constraint or challenge last year. In 21-22, we started the year with negative working capital. And
correct.
That was because in 2021, because of COVID disruption, the operations did not happen for a few months, and most of the ramp-up started again happening only towards the end of the year.
Understood.
So that's when again we built inventories, and then we had good credit periods from the creditors. So that resulted in a favorable working capital at the end of 2021. Because of that, at company level, we had a negative working capital, which is not a realistic one or sustainable one for a large company like us.
Fair enough.
So this is a one-time correction which we had to see in 21-22. Going forward, we think the working capital will be more or less in the current range.
Fair enough. That's helpful. Second is just a broad question on, the pricing negotiations, because we do have still, a reasonable amount of OEM business at the standalone level. So just wanted to understand, given the kind of mayhem we've seen in RM prices, supply chain, etc., how simple or tough is it to kind of go out and raise pricing? I mean, what are your broad thoughts on that? That would be really helpful if you can just kind of explain us how are negotiations or discussions with customers on this subject?
We have a fair amount of transparency in the agreements with all the OEMs. But what you said, it is a challenging time because the raw material price is almost gone up by 100%. But as of now, our track record is we are able to recover it fully. But however, it is a big challenging job which our teams are going through, and will continue to do that.
Sure. Okay. And just any progress on the Celestial acquisition? I mean, what is the timeline? I mean, any progress on introducing e-tractors? Where are we on that roadmap?
Yeah, I think this part we addressed a bit earlier also. We said it basically, so the tractors themselves, we are estimating that in the end July time frame we will submit for homologation. Homologation, the process is not fully in our control. So it's going to depend on how long that process takes. And then once kind of that is done, we'll be able to kind of talk about when we can go to market. So that's the best determination we can give at this stage.
Sure, fair enough. That's fine. Mr. Vellayan, just one, a bit long-term question. I mean, we've had this conversation in the past as well, but how should one think about the business over a 3 to 5 year horizon? I remember earlier you kind of used to say that the traditional businesses will be like a 5 to 7% growth, and the non-linearities will come from TI2, TI3, and that's how the double-digit growth on top line will shape up. So just wanted to kind of take a recap how you think of a business from where we are right now over a 3 to 5 year horizon.
Yeah, our view continues to be the same, right? Which is basically that we are going to invest in kind of and grow new businesses, which is why we also like somebody asked earlier, kind of Mukesh is going to take more responsibility for the existing businesses, and I'm going to take more responsibility for new. The rate at which these new businesses grow, Kashyap, I would say, because they are newer and therefore kind of a bit less defined, I think it's more difficult for us to deterministically predict. But we continue to feel confident that we will kind of grow these businesses, and that we have to basically kind of be in new sectors, because that's where kind of a lot of the growth is going to come from in the future.
Sure. Okay. Thank you so much, and wish you guys all the best.
Thank you.
Thank you so much. We take the next question from the line of Prateek Poddar from Nippon India Mutual Fund. Please go ahead.
So, yes, thanks. So just one small question. What would be your go-to-market strategy for E3-wheelers?
What is the go-to-market strategy for E3-wheelers? Paul, do you want to answer that?
I think little while earlier, I think Mr. Velan addressed that question. I think we're looking, for a launch of the first variant of the E3-wheeler sometime during.
Yeah, I heard that, sir, during September, and you are in the. My question was, how would you want to distribute these products? Would it be the traditional route, in the sense, and what would be your focus markets? Like when you launch, is it a pan-India launch? I was just trying to get some information over there.
We will go. We've laid out a plan in phases. So, we will be first, looking at how to launch that product and get everything right in the southern part of India. And thereby then, we look at the other parts in quick succession. That's the other thing. The distribution model, how we will do, that's pretty much tied up. The distribution is also tied up. The after-sale service is tied up. How we offer the after-sale service, what we do with the experience, how do we data mine the data. Those are new opportunities which we learned in terms of this, and how do we give the consumer a better experience, and also data mine from all the information that keeps coming to us, because in this form you will get a lot more info which you use for your product development, improvements, and also improvements on your go-to-market strategy, in terms of looking at that. So currently, we employed the sales guys, the after-sale service team, and many of this has been done. The production line is getting ready, as Mr. Velan said. And so we quite upbeat that, we will have a good product on which, we can actually make some impact in the marketplace. And based on that, then we'll be launching the other variants that we have planned sequentially across the later part of the year.
And if I may ask, sir, when you talk about tie-ups, right, that is what I was trying to look for. Who are these distributors? Are they existing auto guys? And also on the after-sales service part, you said you have tied up. Maybe if you can explain this tied up part, that would be helpful, sir.
Yeah, I think the after-sale service means, we are looking at servicing within 24 hours, number one. Number two, service on wheels. Number two, so there's a tie-up that is required there. We finish that tie-up so that we can provide. So the downtime on a productive vehicle remains the least, so that the learning is not affected. Those kind of minor details, actually we work to great length in terms of seeing that we are able to get that done. And so the customer feels very confident for the adoption. There is a lot of work that's going on currently to see, who are the potential set of customers. There is a big database, and how do we establish contact with them now, which we are doing through the launch. And then, how do we use influencers on the ground, to see that the bike is, that the vehicle is experienced in terms of this. And thereafter, the adoption starts happening.
To begin with, the last question, how many distributors have you tied up with? What's the distribution strength like?
Today, I think we've tied up with about 40 dealers actually, basically on the southern side of the southern part of India. To answer your question, yeah.
Okay, sir. Thank you so much and have a good day.
Thank you. The last question is from the line of Anupam Gupta from IIFL Securities. Please go ahead.
Thanks. So just one clarification, sir. So the 500 crore enabling resolution which you have done for borrowing, is that just the enabling resolution or is there a plan? Because you said that your cash flow is strong and you don't have right now any inorganic opportunities visible.
Yeah, it's an enabling resolution.
Sure. That's all from my side, sir. So you can, Mr. Velan, if you have any closing comments, and then we can close the call.
No, nothing specific from my side, Anupam. Thanks a lot. And, thanks for all of your support, and we continue to stay in touch with you.
Sure. Thanks a lot, sir. Thanks a lot, everyone, for joining in, and thanks to the management.
Thank you so much. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you. Bye-bye.